Give me 12 minutes and I'll 12x your trading profits.
My entire trading career. And if you give me 12 minutes of your time, I'm going to give you a blueprint on how you can 12x your trading profits within the next 12 months. Let's get started. I have a timer for 12 minutes. Let's get it going. So number one, you need to focus on the process of becoming an elite level profitable trader, and you cannot focus on the outcome, which is the money. When most people get into trading, they're not actually interested in becoming good traders. They're interested in sitting at their desk, pressing keys on their keyboard, pressing keys on their mouse, and just printing money out of thin air. But that is not what trading is. It is not that simple. The traders who actually focus on becoming profitable, focus on becoming skilled traders, those are the ones that end up making money.
Yes. And so he is 100% right. There's a slide that I like to use before I put on any trade, and it's exactly this. There are no expectations for the outcome of the trade. No expectations on the outcome, right? I don't know how much I'm going to make. I don't have any idea how much I'm going to make. I have no profit target, right? I'm not going to anchor myself to anything. I just have a plan to follow my signals when one of my exit signals happens, right? And that's what he's saying here. Focusing on your process, focusing on your plan, which is why I tell you this, right? What's your plan? I'm a broken record at this point, and it's because it's true. It's because it works, right? Focusing on your plan, not how much you are planning to make, right? You cannot control the outcome of the trade, but you can control when you get in and when you get out, and you do that with your plan.
And it's counterintuitive, but when you focus too much on the money and on the outcome, that's when the money runs away from you. That's when you don't end up becoming profitable, because you're so focused on the red and green P&L at the end of the day that you're not actually focusing on what it takes to become a really good trader. I have never met a really amazing elite level skilled trader that does not make a ton of money. So when you're getting into trading, or maybe you're already a trader, but you're not seeing the results that you want to see, ask yourself, are you focusing too much on the money, or are you actually focused on the process of becoming a really good trader? And we'll get into what that process looks like in just a second. Number two, everything in your trading is all about risk management and limiting your losses. There are a ton of traders out there, a ton of investors out there that can make money. The problem is they're not able to keep it. They're not able to retain it. Our number one objective, our first goal as a trader, isn't to make money. It is to conserve the money that is already in our account. It is to...
Dude, I'm probably going to agree with every single thing he says in this, because these are the facts. These are the facts. You're only going to stay in the game if you keep your losses small. If you're buying something because a stupid YouTuber said, oh, trust me, guys, it has to go up from here, right? This is a generational low. It's only going to go up from here. And you've watched your account evaporate 30%, 40%, 50% of your profits because you figured this guy's right? I have to listen to him. He's a YouTuber. He has to know what he's talking about. I got news for you. First off, you probably should have your own plan rather than relying on some YouTuber, some random guy on the internet. That's not me. But second off, you will not stay in the game if you cannot take a loss. In fact, let's do some trading math on this real quick. So hold tight. Where's the slide I'm looking for? Here. First, there is no shame in losing money. No shame in losing money. But there's no shame in losing money on a stock trade. But to hold on to a loss and let it get bigger and bigger, or even worse, buy more, is amateurish and self-destructive. Okay? To hold on to it and then to double down as it's going down is amateurish and self-destructive, because we do not know where the bottom is. I can tell you when it has bottomed and it's starting to go back up with the outlier trend template, when the 10 goes over the 20 and price goes over the 50, and you can see that right here, right? Mathematically, it has to do this mathematically, which is why I can say that with 100% certainty. Your 10 over the 20, price over the 50 is a mathematical edge to knowing when the stock is trending up. Does it stay like that forever? No, of course not. Here's an example of where it came down. But you at least know the direction of the trend when it's doing that. Now, they can do this sort of mess right here, which is really frustrating, right? A little bit of over, a little bit of under. And that's why I say you might make a buck or lose a buck every now and then. But when they cross and you see that they crossed, you can ride this for ages. You like on EXE, for example, which I've never even looked at before. And right here, it crossed. Right here, it went under. You made 13%. Right here, it crossed. And right here, it went under. You made another 14%. Pretty sweet, right? Really sweet. Now, there are some times where it gaps down And this is one of the reasons why I don't trade earnings. This is one of the reasons why, if I can avoid any sort of news event, I'm going to get out. Right? And earnings is that news event. Now, granted, right here, earnings came a couple weeks later, but some sort of catalyst happened right here. So that's why I want to tell you, you do not have to hold anything as it's going down. And I always like to go back to the advanced money destroyer, aka AMD, because so many people were saying AMD was such a great buy at 130, 120, 110, 115, 100. And now it's been as low as in the 70s. Now it's at $98, right? You don't have to hold this on the way down. In fact, you shouldn't hold it on the way down, because it told you over and over and over. It told you, if you would stop putting your biases into the market and listen to what the market's telling you, stop trying to tell the market what you want it to do and listen to what it is telling you, you would not be in this mess right now. You would not be in this mess.
Protect our capital.
Trading math. Sorry. I thought to myself, I was like, there's something else I wanted to say. What was it? And then it just popped back in my head. Trading math. So a 10% loss requires 11% to get back to break even. A 20% loss requires 25% to get back to break even. A 50% loss requires 100% gain to get back to break even. Now that's where people's brain breaks. What do you mean a 50% loss requires 100% to get back even? That math doesn't math. What are you talking about, Chris? Let's do this. Let's go to AMD, who has suffered a 50% loss, and we're going to measure it, right? A 50% loss, right there, 55% loss from here to here, 55% loss. To get back to break even, to go from 214 to 98 was a 55% decline. To go back from 98 up to 214, that takes a 123% gain. So while you're looking at your account saying, oh, I'm only down 30%, oh, no big deal. That's a huge deal. That's a huge deal. If you're down 30%, what's the math on that? If you're down 30%, you need a 43% return from where it is today to get back to break even. It's a giant deal. If you look at if you open your trading account and you don't see winner after winner after winner after winner after winner, you're doing something wrong. Now, the reason I say that is because I've lived it. When I made that observation and I only saw winners in my account for weeks at a time, I was like, oof. Oh, that's how it's supposed to be done. Now, how do you do that? You find a stock that's working and you hold on to that stock that's working. Once that stock stops working, you bounce it. Okay. And you're only going to give it this much room to find out if it's going to work or not. If it doesn't work, that's fine. Just move on from the trade and look for something that does. So you're holding on to your winners, letting your winners run out of control and cutting your losses short. And then when you log in your broker platform, you just see these winners over and over and over and over and over. When you do that, that is how you're successful in the game. It's not about getting the biggest wins out there. It's actually cutting your losses as small as you can. That, honest to goodness, matters more than finding these giant winners.
Capital. Once our capital is protected, our second goal is to make money. And most people think that they're going to become more profitable by learning more strategies or going on YouTube and searching for more trading confluences or looking at ICT and trying to master fair value gaps. That is not what's going to make you more profitable. The easiest and quickest way to make more money every single day, every single week, is to limit your losses on your losing trades. And this is a completely different mindset that you need to adopt. When you look at a setup, you look at a strategy, your first thought shouldn't be, how much am I going to make if this setup hits target? Your first thought should be, how much am I going to lose if this trade doesn't work? And guess what? We are traders. There's no such thing as a 100% win rate. We're going to have trades that don't work. It's a part of the profession. It's inevitable. So your mindset should constantly be, how can I limit my losses on my losing trades? Because guess what? If you're able to do that and effectively limit your losses starting tomorrow, you will become more profitable without learning more strategies, without tweaking your management, or without raising your targets. By just limiting your losses on your losing trades, you will make more money. And you need to adopt this mindset. Always approach trading from a risk manager type of standpoint.
And what you hear me say is always look at trading from a risk first perspective. You're saying the exact same thing. And this is how you I can't stress to you enough. This is the rules. These are the rules. Sorry, my English was bad. These are the rules. I didn't make the rules. Joe Biden tried to make the rules, but he couldn't do it, so I made the rules. No. These are the rules to be successful in trading. You must cut your losers short and let your winners run out of control.
Because ultimately, that's what we are, risk managers. Number 3, you need to put yourself in a position to succeed in the first place. And this is where most traders kind of screw up. Number 1, I think the statistic is after 1 month, 40% of day traders quit. How do you expect to succeed if you're only giving yourself a month to make this work? It doesn't make any sense. And most traders, they jump right into the markets with no experience and they immediately begin trading and risking their own money. Why? Why are you not demo trading? Why are you not focusing on your education? Think about it. When you become a doctor, a lawyer, an engineer, a nurse, an architect, literally any profession out there, you have to go to college and literally drop like over 100,000 in 4 years of your life to learn what you want to do. You're putting yourself in a position to succeed or at least maybe get a job after college if you actually do that. But with trading, we just go into it, spend a month trying to do it, it doesn't work, and then we call it a scam. How does that make any sense?
And it's so right. We spend a month trying to do it, and if you aren't profitable in your first month, it's a scam. Let's look at the Dunning-Kruger effect. Dunning-Kruger effect. You may or may not have heard of this, but this is so true. Where someone comes into the market, they get a couple wins, and they're at the peak of Mount Stupid. I know everything. And then they fall into the valley of despair. And then eventually, if they can keep in the game, which unlikely to happen, but if they can keep in the game, they go up the slope of enlightenment to the plateau of sustainability. Now, most people, when they get into the market, experience some of this. I did too. I remember specifically when I was at the peak of Mount Stupid. I'll tell you about it. I remember I made my first $800 in the market. And I remember taking a shower. And I'm scrubbing what little hair I have left. And I'm like, oh, I'm such a genius. I just made $800 in the market. I am so smart. Oh, I'm going to be doing $800 a day every day. Oh, man, how much is that a year? What if I compound that? I've been there. I know. So the stats that I've always heard and what I always say is 90% of traders lose 90% of their accounts the first 90 days of trading. And they do that because they have no idea about risk management. No idea about risk management. And they don't paper trade. And if they do paper trade, they don't treat it as if their life depended on it. Now, I blew up my account twice. One of the times that I blew up my account, I was like, I have to figure this out. And I don't remember if it was the first or second, probably the second. And I spent 6 months trading my face off, paper trading as if it were real money, because I was like, I must figure out how to do this. I don't have any money left right now, so I got to save some. And in the process, I'm going to trade my face off, learning how to do it correctly, reaching out to people who can teach me how to do it correctly. That I had to do myself, and you should probably do too if you're struggling in the market. Take a step back, take some time off from trading and learn the process. Because a lot of people that come onto my live streams talk about how they've been hosed for months and months. You don't have to be, but you do have to acknowledge when you're wrong, and that is hard. That is super hard. By the way, I just want to say, just making money. Super thankful. I took 2 trades today. One closed 28%. The other is Nito. Could you check it, please? Not an outlier. I'll look at Nito for you. By the way, you never have to send me ever super chats. I in fact don't want you to send me super chats. I want to help you out as much as I can and never ask you for anything. All I ask is that you tell other people about me. So Nito, looking at it right here, it's been in a downtrend. This is a penny stock. Penny stocks make me really nervous because of liquidity. Your 10, 20, 50 has not crossed back yet. You've got a couple overhead order blocks that look really difficult to get through. But it did have this giant candle. I don't know what's going on with this huge candle right here. But maybe there's some news catalysts that can help out with that. But then again, penny stocks are really risky to me. So let's get back over to this. And let's continue the video.
Sense. If you want to succeed as a trader, you need to put yourself in a position to succeed. You need to focus on your education. You need to paper trade. You need to, actually give yourself a chance of making this work versus you just go into an account with your real money and you're throwing random money at random trades, right? Do you have a methodology? Do you have a system? Do you have like a consistent way of approaching the markets, or is it all random? And by the way, you can look at my free 10+ hour course. This will help you build that system. It will help you build that foundation. It's in the description of this video, but focus on the education, put time into it. Don't just, look at it as a get rich quick scheme. Number 4, get a coach or a mentor and trade with a community.
I'm nervous he's about to start pitching a bunch of stuff. Here's the deal. My YouTube videos are the best. My YouTube videos are the best on YouTube, which honestly, I really hope that they are. I hope that they bring you more education than anybody's paid course out there. Every single one of them is for free on YouTube. And I'm not asking for anything other than you telling other people that this is the best channel on YouTube. That's what I'm looking for, right? Now, again, if he's about to pitch something, I'm going to fast forward as fast as possible. But if I can be your coach, if I can be your mentor, that would be awesome. And this is a great segue to OVTLYR University. Coming up in about a week or so, we will be having OVTLYR University, 10 real life people who will be interacting with me in the live streams, which I'm so stoked about. We'll be able to learn everything that I know in OVTLYR University. And here's the best part about it. It will be free to those 10 people who are working with me directly. And for everybody else who ever wants to watch it here on YouTube, it will be free to you as well. We are trying to completely upend trading education. We're trying to help you save time, make money, and start winning with less risk. And I'll do it for free. I'll do it for free here on YouTube. So OVTLYR University will be coming out in a couple weeks. So be sure you subscribe. Be sure you tell everybody else that OVTLYR University is coming. And you do not want to miss this, because I'm going to teach you every single thing that I know.
And I'm going to be completely transparent here. I have a mentorship. Okay, I am not ashamed to admit that. And yes, my mentorship costs money because I get my students.
All right, like I said, I figured he was going to pitch it. So we're going to fast forward here, but be sure you like and subscribe this video. That way you can be notified whenever we're doing OVTLYR University, which will be 100% free. And I'll teach you 100% of everything that I know. And if it's useful to you, you can get the OVTLYR software, but you don't have to. I'll teach you everything that I know. So let's fast forward through this. I don't want to hear about his pitch.
Success. I work with you until you're consistent. That ultimately tied, probably because of psychological and emotional issues that come up in your trading, that ultimately tie back to discipline. What is discipline? Discipline is being able to follow your plan and literally ignore and control your emotions. So you need to.
For sure. Now, what we're trying to do with OVTLYR University is something akin to what Richard Dennis did in the I think it was 1983, 1984. He took, I think it was 14 people, a handful of people from all walks of life, and he taught them how to trade in 2 weeks. And he gave them $1 million each and said, go for it. And he made $150 million from their profits. Pretty sweet, right? But he says, I always say you could publish the rules in a newspaper and nobody would follow them. The key is consistency and discipline. So he had a winning plan. He had a winning edge. But there were some traders who did not make any money at all because they couldn't follow that with consistency and discipline. They would go rogue. They would be like, well, I think I know better. I'm going to do this or I'm going to do that. But his rules are already profitable. So why are you deviating? Why are you going off script? Right? So to this point here, once you find something that works, you need to follow that with consistency and discipline. And what we talked about earlier, right? If you have 5 of the 6 legs of your chair, but the 6th one isn't there, don't take the trade, because that invalidates the rules that we've been working on for ages. That's what you need to remember, right? You need to make sure it has everything that you want. Wait and cash for proper setups. How long? As long as it takes. And yes, sometimes it's boring, but boring pays the bills. Trading shouldn't be exciting. If you're doing this for action, go to the casino. If you're doing this to make money, start following a disciplined approach.
Figure out how you're going to become more disciplined. You don't have to figure out how to stop over risking, how to stop FOMOing into trades. No, figure out how to hold yourself.
No mo FOMO. No mo FOMO. That's what I try to teach you guys. No mo FOMO.
Accountable. And that ultimately is what discipline is. That is the reason why I'm a profitable trader, because I'm extremely good at number 2. I'm extremely good at limiting my losses.
He's extremely good at number 2. I'm sorry. I live with a 13-year-old and a 10-year-old. That was hilarious. I'm extremely good at number 2.
For everything. I have losing trades, but I barely lose on my losing trades because I'm so good at limiting my losses. Why? Because I hold myself accountable, because I'm disciplined. A lot of you guys watching this video, you are closer to success than you think you are. But the reason you're not successful is because you have lack of discipline. You're not actually following your plan. You know what to do. You know you shouldn't be over trading. You know you shouldn't be over risking and not having a stop loss. You know you should be consistently following your trading plan that you know makes you money, but you don't do it because of discipline. Every issue ultimately ties back to discipline. So how do you be more disciplined? Wake up at the same time every day. Go to the gym every single day.
Let's go to the gym every day. That's what I do. Now, to reiterate the NOMO FOMO part, right? This is my returns last year, 91.37%. Every single one of these was an outlier signal. Not one of these was me going rogue. Every single one of these trades was when everything was set up for me. Now, does that mean I had a 100% win rate? No. In fact, I had a 69% win rate. But I had a profitable month every month I traded, except for November. Only November was a losing month for me. Now, you'll see long stretches of flat, not doing anything. That's because there were no setups. But when there were setups, Chris made bank, okay? It was like going to the ATM. This is the mentality you need to have. Not in it for action. I'm only in it for when things set up. And in fact, I didn't even know, but because I trade options, that actually would have won the 2024 US Investing Championship for options, because the first place guy was like 90 point something percent, 90 point something. And I came in at 91.37. Unbelievable. I had no idea at the time. So my plan is to enter the 2026 US Investing Championship and let you guys follow me the whole way. You can take every trade that I trade. Right. And then I see the YouTube comments. They're like, but Chris, there's always an opportunity out there. Why aren't you taking them? Because I don't have to. I know my edge. I have no FOMO, and I'm going to make plenty of money at the end of the year. I don't know how much I'm going to make because I'm not setting a outcome-based goal. I'm setting a process-based goal. My process-based goal has me in the market when things are working, out of the market when they're not. So I don't have to stress. There's no more FOMO.
In your morning preparation every single day, have an actionable plan where you know exactly what your trading plan is, what strategies you take, what your risk management is, what your trade management is, what your execution is, what your rules are in your trading. Do you have rules in the first place? All of this goes into your discipline. Once you have all that written out, and once you're consistently doing the same things every day, right? Guess what? Consistent actions lead to consistent results. Consistent results equals you making money, equals the outcome, which is you becoming profitable. Okay. Think about all the issues in your trading and understand they all tie back to discipline and work on.
And we'll do this as a slightly different analogy. Let's say that you wanted to be in great shape, right? Just because you want to be in great shape doesn't make you in great shape. Let's say you need to lose 100 pounds. All right. I lost 60 pounds between 2022 and 2025. 60 pounds. It's hard to believe. I look at the mirror and I'm like, how did I lose 60 pounds? That's crazy. I didn't even realize I had 60 pounds to lose. But I lost 60 pounds. 60 pounds. I could not have woken up, let's say it was January 1st, 2023, and said, I'm going to lose 60 pounds today. It's just not going to happen, right? I had to create a process, and that process was changing what I ate, taking peptides, going to the gym, putting in work, and then the outcome happened on its own. Trading's the same way. You come up with a plan, and then you execute that plan day after day after day, and the outcome is having more money in your account. Do we see the parallels here, right? In order to have lost 60 pounds, I had to make a plan and execute on that plan daily. Even when everybody's stuffing their face with cheesecake and pizza and beer and everything else, I'm on the other side having a different meal, having a different lifestyle because I was going to the gym, and doing different things because if I wanted to achieve my outcome, I had to have a different plan. Same thing with trading. If you want to be a profitable trader, if you want to make money in the markets, you need to have a plan. And that plan is not going to be the same as everybody else. And you know why it's not going to be the same as everybody else? Because everybody else is a loser. Plain and simple. Everybody else in the market is a loser. If you want to separate yourself from the 90% of traders who fail, you cannot have the same plan as them. Because their plans are buy the dip. Their plans are buy a great stock when it's going down because it has to go up from here. If you want to separate yourself from everybody else, create a plan, stick to the plan. The outcome will take care of itself. Sounds crazy, but it's true. Come on, buttons. There we go.
That is the reason you're not profitable. And next, guys, practice PEAR. I think I have about 2 more minutes, less than 2 minutes. What is PEAR? PEAR is P, prepare. E, execute. A, analyze. R, refine. You want to become a profitable trader? You want to make this work? If you do PEAR consistently, month to month, and you have a mentor, and you're focusing on the process, and you're limiting your losses, and you're
I don't know what PEAR is. Let's see. Let's see if we have to pay money to learn what PEAR is.
extremely disciplined, you will 1000% become profitable. There's no other way not to. If you prepare a trading plan, figure out what your plan is, what strategies you take, risk management, trade management, all that good stuff, then you execute that plan. That's E. You execute the plan, right? What is A? A.
Oh, okay. Prepare, execute.
Is you analyze the results.
Analyze. Okay.
From that execution, right? So you take, let's say, 50 trades. Then you analyze what was the outcome from those 50 trades. Did you make money? Was your management good? Did you leave?
Dude, this is so, everything, he's spitting straight facts, right? The analyze is so important. This is why I tell you guys, you need to document every single trade that you put on. Every single trade you put on, you need to put on as many details as possible in your spreadsheet, in your journal, wherever you're keeping track. Every single thing that you need to know to look back at that trade later on and be like, why did I do this? What were the circumstances in that trade that led me to think that this was the right move to make? And then you can look at those and you can say, oh, you know what? Didn't account for this. I didn't account for earnings. I didn't account for market breadth. I didn't account for the market trend. I didn't account for whatever. I bought it when the price was going down. But you'll never know unless you actually write that down in the process. And yeah, it's going to take you a couple extra minutes. But those couple extra minutes can legitimately change your financial future. So it's worth it to me.
A lot of money on the table. Did you lose out on a lot of money? Analyze that execution. And next, once that's analyzed, you refine what? You refine that trading plan that you created originally. And after iterations of this, where you create a plan, you execute on that plan, you analyze the plan, find ways to improve, and then you refine the plan and then execute on it again. You continue to do this time and time again, and you will become profitable. How can you not improve if you're doing this? Sorry, there's someone at my door, but got to do the video, but how can you not improve if you're doing that? If you could focus on all these things.
This is straight facts. This is straight facts. Everything he's talked about, straight facts. And the whole coach mentor thing, I'll tell you one thing, that is so true. And while he's pitching his course and while I'm saying, make sure you subscribe, etc., it's so true, because I traded for years thinking that I was a genius, and yet I wasn't making any money. So then I contacted Steve Burns, author of New Trader, Rich Trader. In fact, one of the quotes from New Trader, Rich Trader, Squat Toe says, right? You're saying I won't make 200% returns this year? New Trader asked. Yeah, that's totally in the book, right? I was like, I need to find people who have already figured out how the market works. And I remember specifically telling Steve my strategy that I thought was so smart. I had 84% win rates, yet my account was evaporating. 84% win rates, yet I was still losing money. And I remember having that conversation with Steve, and he said, Chris, yeah, I used to trade that way too, until I realized I wanted to make money. Had I not had that conversation with Steve, had he not slapped me in the face, I probably would be making the same mistakes. In fact, Mark Minervini told me something similar. He said, Chris, this is why your trades suck. And I remember hanging my head in shame, be like, yep, dude's right. I need to shut up and listen. In fact, I think he told me that. He's like, you need to shut up and listen. Don't tell me what you did. You need to listen to what I'm doing, because this is how it works. So getting that coach/mentor is so incredibly important. And I'm really grateful that I can hang out with you and help you with that. So speaking of, I want to help you out with some stocks. Go ahead and put in the chat what stocks you're looking at today. Make sure you put in it if it's Palantir long or Google short, whatever. Give me some perspective in which direction you're looking. I have 7 minutes that I can look at these with you. And in the process, there were a couple of questions I'm going to answer as we go. Mitch, learning the breadth saved me last week. There were several I was looking to buy into and would have gone up a little, but seem to be dropping today in the pre-market. When it works, it works. Yeah, dude. When you learn how the market works, you'll be like, oh, okay, oh, wow, the whole market's getting tanked this morning. Huh. Why am I not surprised? In my Sunday video, you can go back and watch that. I said, market breadth has me really concerned. right? When everybody's up here, when all the buyers have come to town and everybody's euphoric, right? When it's full of buyers, who's left? Sellers. Sellers are all that's left. And there we go. There we go. Look, getting absolutely monkey hammered this morning. By the way, AT&T followed my plan last week and got out with a 15% gain. 15% gain in 2 days by following my plan. I think it was worth sitting in cash and waiting. Sitting in cash and don't F up. James says, I don't understand not trading into earnings. You could sidestep a pullback, or you could miss the next leg up. If you miss the leg up, you're not likely to buy back. So let's look at a couple examples of why I don't trade earnings. First example is Palantir. Palantir is the example that everybody wants to go to. Like, this is why you trade earnings. Look at this. This humongous move right here. Man, if you didn't buy earnings, you were so dumb. If you didn't buy earnings that day when it went up 26%, you were so dumb. Look, I get it. I get it. But let's look at Elf Beauty. Here's an example, another YouTuber stock. Elf Beauty, after earnings went down 25%. 25%. Let's look at Meta. Where's the last earnings date? Earnings here. So here's a gap up on Meta, right? 4% or so gap up. Let's look at Apple. Apple can't go down, right? Apple went down about 2%. Not too big of a move, right? But here's the deal. We don't know which direction it's going to go. Could it be the next leg up? For sure. But it also could be the next leg down. And it's a risk that I'm not willing to take. Right? I will love to trade up into earnings. I'll buy the rumor and then I'll sell out before the news. That's what I want to do. Mikey Mike has a very good question. What barometric pressure do you utilize in your trades? What about your altimeter settings? Yes, exactly, Mikey Mike. There are so many things that you could look at. I really appreciate you asking those very detailed questions. Susan, when the 10 EMA candle drops below, are you finding if candle body is half above and half below, do you get out? Further, does it matter if the candle's green or red? Does the wick matter? I don't look at wicks. I only look at closing prices. So here's an example, right? It was half above, well, maybe not half, but somewhat above, somewhat below the 10 EMA. What I care about is where is it closing? If it's closing above the 10 EMA, mathematically, your trend is up. If it's closing below the 10 EMA, mathematically, the trend is down. Now, it won't be as obvious as this every time, right? Let's go back to EXE. Because this one could absolutely have frustrated a lot of people, where it's going, over, under, over, under, over, under. That's super frustrating. I get that. But the thing is you can't control that. You can only control when you get in and when you get out. And sometimes you make a buck and sometimes you lose a buck. But other times when you ride the trend, you can make tons. Nikolai, what do you think about straddle option strategies? Would you buy a call and a put at the same time? Let me show you what that means. Long straddle options. So buying a long straddle option strategy, in my opinion, is a giant waste of time and money. Open image in new tab. Why would I say a giant waste of time and money? Hang on real quick. Let me make sure I can do this without. Okay. I say it's a giant waste of time and money because if you're buying the straddle, you're paying extra, right? So in this case, you're paying $2.50. Well, no, actually, you're paying $30.30 for the option price. Okay, this is your option price, while the stock is at $250. Now, it has to move by the amount of what you paid. So you're only going to break even at $219, or you're only going to break even at $280. Now, that means, what is $280? $280 over $250. So $280, or actually, we need to calculate the percent right there with 30/30. So 30.30 divided by 250, because that's the price of the option divided by the price of the stock. So it needs to move 12% in either direction before your expiration in order to be profitable. 12%. So if it goes 10.9%, you lose money. If it goes 5.5%, you lose money. And the less it moves, which is the most likely outcome, the less it moves, the more you lose. The less it moves, the more you lose. But if it does go greater than 12% and it goes way up like this, the unfortunate problem with that is this could be making even more, but you already had to pay for this side. You already had to pay for those puts. That sucks. I don't want to pay for puts that I'm not going to use. So in my opinion, that's like we talked about earlier with hedging. It's exactly like what we talked about earlier with hedging. I would rather just pick a direction and go for it, because I'm going to lose less money if I'm wrong, and I can make more money if I'm right. So it's a great question. Gary, when your chart messes up, thank you. Somebody in our it was a YouTube comment or something. I saw that over the weekend, because I kept having issues with TradingView, and they said double click the prices, solved everything. Gary, yeah, totally. Thank you for that. Somebody this weekend got to me before that, but I would have like lost my shit right there, like I did over the weekend. Wayne says, do you look at daily charts? Absolutely. I don't look at anything except daily charts. I might peek over to 5-minute chart. I might peek over here. Let's see. And if we double click it, it goes back. But I don't look at it. I mean, that's about the extent of what I do. Like, oh, is it trending up at the moment or down at the moment, midday? Oh, it's trending up right now. Okay, cool. That's about it. So let's look at Richard. Says beek, B-E-K-E, long. So B-E-K-E. All right, B-E-K-E got a buy signal. Looks like today. Yeah, today it's sitting on a buy signal. 10-20-50 looks to be crossed up. It did get less fearful, slight bit greedy, and then it got more fearful. Now it's showing to be a little more greedy. The real estate sector is looking very bullish as far as the fear and greed goes, looking more greedy. And then if you want to look on the breadth of the real estate sector, it's actually continuing to increase. So that looks pretty good for me. If we go to BEKE, yeah, I mean, honestly, it's I see a lot of good setup here. Just watch that close. If it closes under the 10, I would not hold it. I would not hold it if it closes under the 10. Otherwise, it actually looks pretty good. Mr. Jim's friend also look at CME. CME. All right. So buy signal came on CME already on, date was that? April 15th. Tuesday, April 15th. And you can see it's like really performed since then. Getting more and more and more greedy. This is what you're looking for. You want to be watching a stock that's getting more and more and more greedy. But when it peaks, like it did up here, for a long time, it was sitting at high 80s, and then it can snap back like it did right there, right? Huge snap back down. Now, getting more greedy, less fearful. The market breadth for financials getting more greedy. We haven't quite had that crossover yet. So CME also looks pretty good. Let's check if there's anything else on the chart. CME. Yeah, CME looks brilliant. I love it. No problem with CME for me. However, of course, keep your risk in check. Let's go to the next one. Skinny Buff guy wants to look at BJ. BJ. All right, so BJ is sitting on a buy signal right here. It's within a bullish trend. That's why it's got the green background right there. It's getting more greedy. The sector's getting more greedy. The staples, however, this is the staple sector. The breadth is kind of waning on that. So you got a little bit of an issue right there, a little bit of headwind. And let's look at BJ real quick. BJ's wholesale. So looking at BJ's, again, 10-20-50 is looking good. You got earnings a couple weeks out. I don't know, man. For me, that doesn't look so bad. Doesn't look so bad. Georgia wants to look short, Netflix short. Okay, so Georgia, I don't like that setup. And I'll give you several reasons why. First, we got a buy signal. Second, Netflix is in a very obvious uptrend right here, getting more greedy. The communication sector getting more greedy. And then the market, as you know, is trending higher. Now, granted, it's pulling back today, but the market's still got a bullish trend right here. So Netflix short looks like a really, really risky proposition. So listen, if you're ready to save time, make money, and start winning with less risk, be sure you click one of these two videos, and I'll see you in this afternoon's live stream. We'll talk soon.